Hello. We are live on Facebook. Happy Monday,
Yay!
everyone.
Happy Monday. I don't know, but I'm excited about Monday. There's something that we start the week in Mondays, and this is the most exciting time of the week, right? And I know Anna works out. She works out. She eats healthy. She has her mindset straight, and the same thing goes with Dee in Orlando. She's in Orlando actually, Anna. So so
Yes,
good
it's
morning,
good to have,
everyone.
I know
Good
it's good to
morning.
have all that positive energy to start the week with. So thank you so much for everyone that's watching right now. Happy Monday. Welcome back to a Magnet Monday. Today we have a lovely guest who's going to talk to us all about Miami and analytics and all of that. And we are eager to learn. Hi, Anna. Thank you so much for being with us. How are you today?
I'm doing great. Thank you, ladies, for having me. And just to sort of echo what Erica said, it's all about the mindset. It all starts here.
That's
So what
right.
a wonderful way to start the week with you, ladies. Thank you.
Thank you. No, thank you so much. And I'm excited because honestly, I had Anna about 2 or 3 months ago in the pandemic, and I'm excited to know what's happening in Miami, what's going on, because there's a lot of uncertainty right now. Is there low inventory? There's no houses to sell, and a lot of negative information. But I'm sorry to
Yeah.
tell you guys, the interest rates is still amazing. People are still buying, and that's the most positive news. So Anna, thank you again for being with us on Magnet Monday. And shoot, give us what's happening with Miami. Tell us what's going on in our market, please.
Here's what's going on. There's actually a lot of positive going on in the Miami market in this period of uncertainty. Look, we're for sure in a period of radical uncertainty. A year ago, no one could have predicted any of this, what's going on now. We don't know what's going to happen, how it's all going to play out, what the time frame is, but we do know that we're seeing very, very positive things play out in the Miami market. And one thing that I always have been saying is that we need to think of Corona, of the pandemic, as an accelerator of trends. It has sped up many things that were in place before the pandemic. And one very positive thing that we had in place was the movement of peoples into the state of Florida. In 2019, the state of Florida was the largest recipient of net migration than any other state in the country. And that
Yeah.
has only continued during this period. And look, I don't wish the Corona time on anybody, but relatively
Absolutely.
speaking, we're doing quite well. We have a very a healthy lifestyle here that's built around the outdoors. God willing, there's no second wave, there's nothing like that, but our lifestyle here is built around the outdoors. We have summer all year round. We have, it's a lot less dense than New York City. So we have all of these factors in place that make people feel more comfortable in a period of uncertainty. And then where we're seeing this reflected in the numbers is in single family homes.
Yeah.
And
Yep.
there was a survey that was released recently by Zillow Trulia, one of the big portals, and they aggregate all their data of millions of people looking at online for homes. And they found that the two criteria, number 1 and 2, that are new, that people now factor in when looking for a home, are outdoor space and the ability to work from indoors, more space to work in their homes. And this,
Yeah.
of course, is conducive to single family homes. And this is what we're seeing. We're seeing in some neighborhoods, end user neighborhoods. These are neighborhoods with good schools, with communities where people are going to move with their kids to live. In end user, primary single family home neighborhoods, we're actually seeing record high sales volume. There was a dip initially, of course, and then it recovered, and now we're seeing record high volume. And this is actually most pronounced in $1 million plus, but it's carrying forth through all the price ranges. And that's a very, very positive thing. That means that people are seeking out those homes and those neighborhoods as a place to move their families.
That's great news.
And those are
Yep.
the things that we have to keep in mind when we are home shopping and thinking about our family and growing and all of that, that we have to factor in the fact that we need outdoor space and we need to space to work at home. And I know that a lot of people, like, for example, Eric and I talk about this all the time. I love working from home. She may not like it as much, but because of the situation, like, we have to work from home. So now that's something that, even if people didn't think about that before, now they're like, well, just in case I need this space to work from home. So we
Correct.
need to know, like, all of this data.
Correct. And it's quite literally record high sales volume. The first neighborhoods to clock in the record high sales volume, I believe it was June and July. It was Palm Beach County and Fort Lauderdale, $1 million plus, literally had record high sales volume, while different submarkets in the condo submarket and so forth were still 30-40% down volume. It's a very, very sharp contrast in how people are behaving, how consumers are behaving during the pandemic. And it's an important thing for realtors listening to recognize that people are making purchasing decisions based on a motivation of wanting to be for their families to be safe and to have outdoor space and place to work indoors. And we're seeing that in the markets here. Now the million plus is doing the best for a variety of reasons. And I've talked about this quite a bit. One is that that's usually purchased by what we'll call the investor class, people who have financial assets. So in this pandemic, job losses across the nation have been felt most heavily by people earning less money. It was something like 40% of job losses were felt by people making under $40,000 a year. And then recent reports coming in show that people earning more than $80,000, $100,000 a year, employment has recovered, but it hasn't for lower wage earners. And all the actions taken by the Federal Reserve to boost the stock market, do all these things, it's benefiting people with financial assets. And these are the people buying million plus houses. And that's why we're seeing that bigger benefit there. Those markets have rebounded more than more affordable markets where the median price is like $300,000, $400,000, because that consumer has been more hurt by job losses.
Yeah, and what do you think right now about, or what do you say about unemployment? Where are we at in that aspect? Because I know that it's, I mean, the numbers are going down, and that's a positive thing. But what are your thoughts on that?
So the recovery in employment, the overall number is going down, but the recovery is not equal. So the recovery is being felt more positively by people making more money. And also, what did it dip down to 10 and change now? I think it's below 11 officially, but it's a question of how they count it. Like they're not counting people getting various benefits, all these things. And then also there are all these stats coming in showing that permanent job losses are high. Small businesses have been affected the most. We have large retail chains going bankrupt all the time. Every other headline every day is some other chain closing. So we're not out of the woods. And even if that 10 and change number is accurate, that is still extremely high for America. Let's keep in mind that going into the pandemic, we were under 4%. We were 3 and change. And so that's a very, very different reality. And again, that 10% is felt most heavily by people on the lower end of the economic spectrum. And that adds, a not so positive trend accelerated by Corona is the widening wealth gap. That was in place before too, and that's being accelerated now too for many reasons. Job losses, just think about like daycare. Imagine you're a lower income single parent and you can't go to school.
Yeah.
Right.
And daycare costs have skyrocketed actually more than the consumer price index because there's more demand for them. So it's really exacerbating socioeconomic tensions in the country. Which is why, again, we're seeing the most robust recovery in million plus single family, because that's considered a need-based purchase that is made by someone who's of the investor class, who's benefiting from the shenanigans of the Federal Reserve.
Wow.
Okay. And can you tell us a little bit, like, where do you come in? Where do you help people? Like, what do you do to help people with, making these decisions and with the data that you can provide? Like, how do you help people?
Sure. So I publish long-term trend analysis reports on the residential markets. I make that macro data publicly available for free on my website on Analytics Miami. I'm a broker. I work with investors, institutions, all different types of peoples and organizations who come to me for guidance and input on acquisitions and what to do in the market. But the reports are available on my site. And I started making those reports publicly available like 2-3 years ago as a sort of, I felt compelled to, because residential real estate, look, for most people, it's the largest purchase decision of their lives, right? Most people, their house, it's their biggest, most important decision, both monetarily and in terms of their life. It's where they're going to live with their families. And the conversation about these markets was driven very much by these reports put out by major brokerages, right? And it drove me crazy because I started reading these reports in like 2015, and it was so clear to me what's going on. My background's in math and physics, okay? So I look at charts. And it was so clear to me what was going on. And they're saying something that's obfuscating reality, like 1,000,000%. I mean, you have heads of brokerages in 2015 saying it's a great time to buy, it's a great time to sell, there's great velocity in the market. I'm like, what are they talking? I'm talking about the condo market. I'm like, what are they talking about? Like, it's so clear. You have transaction volume doing this while you had supply doing this. Like, what? So markets move in cycles. You have to look at the whole thing. You can't just look year over year. 10 years, you see directionality. And so I always keep my own data, and I would look at my own data and I look at 10, 15-year charts. And I'm like, oh my God, how is the conversation being driven by this stuff? It's like insider trading. I mean, they're selling their book. And so I started publishing my own information because I think that people deserve better when making the biggest purchase decision of their lives. They should have an accurate view of the market. And honestly, it's not that difficult. Like residential real estate, is a closed, we'll call it a closed set, like mathematically speaking, right? You look at the MLS, you can take out the data, long-term trend data. It's not that hard to chart it. And there's no reason not to, unless you don't want to show the whole market cycle.
Mm-hmm. No, I think, residential is more emotional than commercial, obviously, but everything is emotional. It's an investment that the consumer is doing, and definitely, they need to know and they need to understand, what's happening in the industry, how the market is, the good and the bad, so they have an idea. And that's why we wanted to bring you on board today, because there's a lot of uncertainty outside. A lot of the realtors are listening to a lot of negative information. And yes, inventory, like you say, inventory, I don't think it's extremely low, but yes, depending the price range right now, I think the homes between 300,000 and 500,000, those are the ones that,
Drop the most, yeah.
That are hurting the most.
Now I'm glad you brought that up. We talked about this briefly before we were live. Yes, that inventory has dropped most precipitously during this time frame. However, it has been dropping for the past 8 years. That's just another trend accelerated by Corona. The inventory of sub 500,000 single family homes in Miami-Dade County, or really in the South Florida region, has been dropping steadily. And now it's just accelerated. This is an example of Corona accelerating trends. And why is it dropping? Well, here's a positive story to this, is that, again, people keep moving to South Florida. We're very early compared to like New York City in terms of the development and growth of our cities and our region. And buying centrally located single family homes is very smart. You get the land value too. And that land value isn't going to stay the same over a 20-year period, as there was no skyline 20 years ago. The city keeps growing.
Right.
Yeah.
So those sort of entry level, we'll call them, purchases are really great, because look, it's all about, when we talk about trends, everything moves in a cycle and a trend, right? And if you know where you are on that cycle and the trend, you know if your purchase or decision is aligned with the prevailing trend or not. And one prevailing trend, very strong trend that we have in South Florida, is the growth of the region, of people moving here. And that's not going to change. And I think it's been accelerated. And so buying a single family home is in many ways buying alongside the growth of the region. You're getting that piece of land in a rapidly growing region. That's a smart play.
Absolutely.
That's right. And what are your predictions based on, like all of that data? What are your predictions for next year? Because I know that, things change, and like you said, we have to look at the charts and take into consideration all these factors. But do you have more or less like a prediction for next year, what's going to happen in the market?
Yeah, great question. So I think that the best performing market is going to continue to be million plus single family. I think that permanent job losses and unemployment are going to be the limiting factor for lower price point single family homes. I don't think they're going to plummet, but they're not going to do as well, because that's where the sticky job losses are going to be. I think that the condo market, is still has to find a price at which it will clear. Going into the pandemic, we had record high levels of inventory. Like literally there were areas with 80 months. I mean, 80, it sounds like fake, like nothing sells. 80 months of inventory, past $1 million.
Right.
I contributed to a few articles about Sunny Isles, and it was like 3 million plus. Sunny Isles had like 150 months of inventory. Like, what is that?
Wow.
That's not market, right? It's crazy. It's like, what are you guys thinking, right? So those market segments were built for outside money, right? They needed outside money to come and buy that stuff. That's not what we call in place local demand, people coming to work here. And those markets they need to find a price to clear. So the condo market, I think there already are, by the way, because the only stuff really selling, most of the stuff selling is below a 2013 price, like a 2012 price. And I think that the condo market is going to have to find that 2012, maybe 2011 price to clear. And that isn't bad. If you think of like buildings, like stocks, and you chart their price per square foot, and you buy within the bottom like 20th percentile of the previous low, like that's okay. You have the upside to go back up. And so there are going to be some very good condo purchases. There already are, but there will be more. The condo market, again, is not benefiting from that change in buyer preference in the pandemic. So yeah, there are going to be some deals there, and that's not a bad thing. Those prices got a little out of touch with reality, to put it mildly.
Oh, absolutely.
Yeah.
And this, again, single family, million plus, I see being very strong. And I think that, again, like, I hope there isn't, but if there is a second wave of lockdowns and more COVID issues in the Northeast, I think that's just going to accelerate it more down here, because again, our lifestyle is built around the outdoors.
Yeah. No, absolutely. And what you're mentioning about condos, is very true. The prices were extremely super high. The only problem is obviously for those financing, it's kind of tricky because obviously everything has to be conventional or more than 25% down. We're always fighting with that, no FHAs on condos. And, unfortunately, some people, that's the only way they can go FHA, and for condos that if the prices go down, then they will be able to finance. So it's always a tricky situation with those. But then again, it's something that residential is the way to go right now. And that's something that, a lot of the realtors really are focusing a lot on residential instead of the condo market. That's what I'm seeing right now.
Yeah, that's where the action is. Look, transaction volume for the condo market has not recovered. I mean, it recovered from the Q2 when it was down like 50 to 70%. Sure, now it's on 20, 30%, but it hasn't recovered. But again, like guys, like down 20, 30%, there's still transactions happening. It's just a question of the price. It's a question of a price and a real buyer. Like nothing goes to zero. There's still stuff happening. Like people need to keep that in mind too. During the Great Depression, and the economic output only went down 25%. It didn't go to zero. Nothing ever goes to zero. It's just a question of keeping your radar active and finding where the action is.
Yeah.
And then realizing how the conversation has changed. Like, you have all these condo buildings will have 30, 40, 50 listings, right?
Yeah.
People aren't stupid. They know the market is soft and they're going to want a deal. So you have to speak their language. And then similarly, people moving down here for the benefit of families and outdoor space and indoor homeschooling, whatever, speak their language too. They want to hear about the benefits of the outdoor space, the room to work from home, the community, so forth.
Yeah.
And I think that's genius. Like that's the way to market those type of, like you said, like developments, projects and whatnot. Because now I see a lot of realtors focusing on that, like family, being safe. I mean, I've seen ads like, do you have a home where to stay? Like, are you safe right now? Like, do you need a new home to stay safe with your family? Like that's the thing, like you said, that's going to capture people's attention. And if they can do that for the condo market, like, just give them the benefits. Like you said, like, you have the views and you have this and you have that and, concierge, whatever it is, like you have to think and make sure that you customize it to what's happening right now. And like you said, the prices are a big factor in that.
For condos, I think that's the main factor. There's such a saturation that the language really is price. You tell people, and also people, if they're looking for a deal, they love to hear that the seller is selling at a loss. And anyone who bought in the last 5 years is selling at a big loss, especially if they purchase from the developer, if they purchase new construction in the last 5 years. Look, Miami is full of buildings with units bought pre-construction listed at 20% losses.
Wow. Yeah. I remember those days completely.
I think we have a question here in the chat. It says, are prices for SFH decreasing next year or pre-foreclosures?
I think, Anna, Anna, can you hear us? I think she got frozen for a second.
It's from our friend Addie. She's on the chat.
Yes, thank
Hi,
you,
Addie.
Let's see if she can reconnect. Hi, honey. Let's see if she can reconnect. Okay, she's coming. She's got to come back.
Yeah. But so good, so much good info, right?
Oh, absolutely.
I think we have to take all of these factors into consideration, and having, like all the data absolutely helps you make the decision. And I think it's like she said, one of the biggest decisions in life, purchasing a home, where you're going to invest your money when it comes to real estate. So I think that we should definitely look into all of that data and look what's happening in the market right now. And I absolutely agree with her. Florida is the place to be. Like we have a very outdoorsy, kind of lifestyle. So, and, great weather all the time, and it's beautiful. So I absolutely agree with everything that she's saying. I think that she's connected again.
Yes, I apologize. It was very odd. I was like talking and didn't see you guys anymore.
Yes. Well, we had a question, and pretty much someone is asking me if we're going to be having foreclosures for the single family homes due to the current market inflation happening.
Due to what, sorry?
Due to the current market inflation
Yeah.
that is happening.
Inflation. What is market inflation?
Let's see.
I mean, okay, so the only besides that point, like the only sectors of the single family home market I would be concerned regarding foreclosures are the lower priced ones, because again, that's where the job losses are. And that was really striking when you look at the numbers, because the best markets, if we look at how fast it was to sell houses, so absorption rate, and then even not paying 6%, 5% commissions, all that stuff, were these end user price attainable neighborhoods like Miramar, Pembroke Pines, etc. And those actually have not rebounded nearly as strongly as million plus during the pandemic, because again, those properties are bought by people who don't make millions of dollars, or who are not necessarily part of the investor class. So as far as foreclosures on single family homes, the lower the price, the more concerned I would be about that, because that's where the sticky job losses are.
Okay.
Mm-hmm. Yeah, that's what she said. She said the price is going up on single family homes. That's what she meant by market inflation.
Prices going up on them. Yeah, so why would we see foreclosures because of that? The reason that we'll see foreclosures is because of loan delinquencies and mortgages. And actually, we hit a record high of severe mortgage delinquencies last month in the United States.
Wow.
Yep. So
it's so soon to tell.
Like very late, like whatever their metric was, those hit a high. And again, that's just going to be a function of job losses. The lower the price house, the more that buyer is likely affected by the job market, and the more we'll see that. But again, like they're going to go like this, because all these institutions that, there's this whole model of operating single family homes as rentals at scale. And there are a lot of REITs purchasing in South Florida, thousands of homes, and they're out there. And so anything that hits distress, they're going to buy it. So again, that's a real floor on the price. And the market for rent single family homes is very strong, and probably will stay strong, because millennials can't afford to buy anything for many reasons.
Yeah.
So again, anything that's in distress, it'll find a buyer very quickly. So I don't see them tanking in price. No.
Yeah. I agree with you on that 100%. I mean, I don't think we're going to feel it, because there's people that are willing to buy it fast. And now I see that, if there's a listing less than 400,000 or even 450, that listing has probably about 20 to 30 offers right now. So as I call it in Spanish, that's pan caliente, that's hot bread right there,
That's right.
And I have a question also on Facebook Live. So it seems like a good opportunity to buy a condo. Is that what you suggest?
Yeah, so there are great condo deals out there. The trick is in finding them, because most buildings, again, will have literally dozens of listings, and you have to be able to look at them and say, this is the deal. And what I mean by this is the deal, you want to be buying below 2013. When I say below 2013, because remember the crash, and then it rose up and up and up, right? So like 2012 is like right out of the last crash. And that's not bad. Look, no one can call the exact bottom, the exact top. But again, if you're towards the bottom 20th percentile of the trough of the price curve, that's an okay place to be, especially if you plan to be there for 5 to 10 years. So yeah, if you could find, those deals are out there. You just have to filter all the other overpriced stuff that's been sitting there for days. Those deals are out there. If you can get a condo at a great location at, within striking distance of the previous crash, that price, absolutely, that's a great play.
Awesome.
Thank you so much, Ana, for all of that information. We absolutely agree with everything that you just said. Thank you for giving us all the facts and, like all of that knowledge and data. Can you tell us where people can reach you, for you to help them, whether they need to find a house with data and whatnot, like where can they reach you?
Sure, thank you. Yeah, they could find me on, on Instagram, it's Ana Analytics. And they could find me on my website, which is analytics.miami. And I'm updating something called the Corona Scorecard every quarter. So we're going to update it now after September, showing sort of transaction volume over various cities and submarkets. And I post videos and market reports there and stuff they can download. And yeah, those are the two best places, Instagram and my website. And then also Ana Analytics on Twitter.
Awesome. I really love, obviously, the information, because now we know where we headed. And not only that, I think that most importantly, we need to learn how to read the stats. Like you said, do your homework, know what's going on. If you're interested in, if you're marketing Brickell or the beach, doesn't matter where you're at, and you really want to buy in a condo, like you said, do the homework, find out exactly if there's a good deal that you can buy. But definitely, I think we're headed, out through this COVID, and I feel like by January, we should entering a strong first quarter. That's how I feel. I don't know if you have any thoughts on that, Ana, but I feel that.
Look, I'm very long-term optimistic on South Florida. I was before, and I'm more so now. Just remember, Corona is accelerating trends, and Florida was gaining population and growing before Corona. And I think as a relative comparison to other cities, we're faring so much better. And we're seeing more high-profile businesses, institutions moving down here also. And so I think that, again, it's not, doesn't sound good to say, but I think in the grand scheme of things, we're coming out very well during this crisis as a region.
Yes.
And I think that will just continue. And then as a realtor, as a real estate professional, you want to see where is that energy, where is that action going into this market? And we're seeing it in that single family home market because people are making decisions based on their family needs in this time period. And then when it comes to the condo market, there are deals out there. Look, telling someone that they're getting a property within striking distance of the last crisis, that makes them feel good. That's not bad. And there's still buyers for that. Not everyone is doing their whole family down here. So there's still buyers for that. So perhaps next quarter is bright. I mean, honestly, I don't think it's so bad now. This isn't like the end of times. We're doing okay here. We're doing okay here. I think we've come out of the worst. Everyone is sort of getting used to things how they are, and I think that we're on the recovery path.
Absolutely. No, I agree with you. And thank you again for taking your time and sharing this information with us, guys. If you really want to reach out to Ana, I'm going to post, I'm going to tag her so you can have her information as well on Facebook Live. She is full of surprises every time. If you follow her on Instagram and in Facebook, she's also always giving good information. And I think at the end of the day, we all work together. We all partner with each other. Doesn't matter if you're a broker or a realtor. I mean, we need to help each other. We are one community, and our community always needs to help each other. I always say that I am your partner. I'm a title company. I'm a title agent, but I am your partner. I help you make that transaction happen. And that's how we need to work together as a team. So again, thank you so much for sharing good information. I feel so optimistic where we live in paradise. Even after the storm, we're always going to have a beautiful paradise in Miami.
That's right. Thank you
You
so much, Ana.
Going back to the mindset thing in the beginning, right? We're so lucky here. I grew up in New York City. I love New York City, so I don't want to say anything bad about that. But you walk out in the street here, and it's sunny. It's wonderful. There are palm trees. No matter how tired you are, or you have some work to do, whatever it is, you just walk out. It gives you a little pickup.
Yeah. Absolutely.
Right. Thank you so much for joining us, Ana. It was an absolute pleasure. Guys, again, thank you so much for watching today's video. Next Monday, we're going to be live at the same time, 1 p.m., Magnet Monday. So hope to see you then, and stay tuned.
Thank you, Ana. Have a blessed week. Bye, guys. Thank you.